Hello everyone, Roger here, back at it again. Thank you so much for tuning in. This is video one of a 6-part series where I'm going to break down the home buying process from A to Z. If you haven't already done so, I have an ebook which also goes over the 6 steps. So if you haven't downloaded, feel free to click below and download a free copy of the ebook and use it as a reference. Actually, before we get into step 1 of the home buying process, please, if you haven't done so, watch my very last video. There's actually a prequel to the 6 steps. The first thing you should do before you even start the home buying process. If you haven't checked it out, it's right here. Click here, watch that first, then come back to this video. And I might be going a little bit fast in this video, so if you miss anything, feel free to rewind and watch again. So at this point, you've watched the last video. The very first thing, the prequel to buying a house, is fixing your credit and getting out of debt, okay? You don't want to go into buying a house while you have a ton of other debt. If you make $60,000 a year and you have $40,000 in debt, you want to take care of that first before you buy a house. You want to make sure your foundation is strong, you don't have a ton of debt. A little bit of debt's okay, but do that before you even start looking for a house. Once you've done that, you've gotten out of debt or you've minimized your debt so that when you buy a house, you can make the payments comfortably. The first step that we're going to discuss in this video is getting pre-approved for a loan. So most people don't have all cash and are going to need to get a loan. So when you're getting pre-approved, there's 3 important things that you need to consider. Number 1, your credit score. If you've paid down a bunch of debt, like like I advised earlier, then your credit score should be pretty good. One thing you want to keep in mind is the credit scores on your mobile apps like Wells Fargo, Bank of America, Credit Karma are not always accurate. So when I talk about getting pre-approved, I don't mean, when I say check your credit score, it's not checking that out. Everything that I mentioned in this video, you need to go through the full process of getting pre-approved with a loan officer. Not having a conversation, not checking your mobile app, but go through the whole process with a professional. So step 1, getting pre-approved, have your credit score checked. This is my mobile app. Wells Fargo, it's a little bit outdated, June 3rd. But you could see there, it says my score is 668 as of June 3rd, 2020. That's what Wells Fargo says. I actually pulled my own credit because I'm a loan officer, I can do that. And I'm gonna show you what my official credit score is compared to Wells Fargo. My credit score as of June 15th, which you could see right here. Okay, you get it, it's right here. 749, 760, 748. So, as you could see, the credit score from my app of 668 and my official score are off by about, 70, 80 points. So as you could see, these apps are not always accurate. Sometimes they're higher, sometimes they're lower. That's why you want to have your credit checked by a professional to know exactly where you stand and what you need to do to raise your score. If you're trying to raise your score, I've made several videos on how to raise your credit score. Click here for how to raise your credit score video. So first thing is your credit score, okay? You want to make sure that's taken care of. The second thing is going to be your down payment, okay? Where's your down payment coming from? How much do you have? And in a lot of places, you could do as little as 5% down, okay? So if you have that money saved and it's sitting in your account, you're good to go. Obviously, the more down payment you have, the lower your interest rate will be. So something to keep in mind, if you ever put down less than 20%, you're gonna have mortgage insurance, okay? So if you don't know about mortgage insurance, Google that and learn more about how mortgage insurance works. So credit's number 1, your down payment's number 2. The third part of getting pre-approved is your income, okay? So how much do you make? And again, this isn't a conversation to have on the phone, and you just talk to someone and tell them your situation and they say, oh yeah, you could get a loan. A lot of, people might do that because they just want to give you good news in hopes that you work with them. But unless you give them all your documents, it really doesn't mean squat. Okay, they could just be saying yes because they want to get you excited and they want to get you as a client. But get an official credit score, send your bank statements to your loan officer, and send your income documents to your loan officer. Okay, so if you're a W-2 pay stubbed employee, they're going to ask for your last 2 pay stubs and 2 years of tax returns. So 2019 tax returns, whatever year, whenever you may be watching this in the future, whatever your last 2 tax returns are, that's what you want to provide to your loan officer. Okay, the next thing you're going to do is you're actually going to complete a loan application. Okay, if you've never done one of these, it could be kind of lengthy if you don't have all the information. Usually takes about 30 or 45 minutes. But the good news is most loan officers like myself all have an online loan application that you could do on your phone or your laptop or your iPad at your convenience. So for example, my loan application is called Blink. You put in your name, your social, your date of birth, your address, how much of a house you're looking to buy, how much down payment you have. It's going to ask you for your employment information. Where have you been working? How long have you been working there? What's the name, phone number, and address of your employer? What's your monthly income? So it's going to go into detail about where you've lived, where do you live now. So it's going to go over all those details. It's going to go over your residence history. It's going to go over your employment history. You have to show 2 years of employment history. So if you've been at your current job for 1 year, they're going to want to know where you worked the year prior to that, how much you made over there, their address, their phone number, and all that good stuff. So it's usually pretty easy now that it's all online. But again, you want to get an official pre-approval. You don't want to just have a conversation or two. You want to go through the whole process and go over all of these details with a loan officer to know exactly where you stand. Now, a couple other things that are good to know when you're getting pre-approved. Gift funds are okay. So what that means is, let's say you have income, you have good credit, but you just don't have enough money saved to buy a house. You're sitting around at the family dinner and you bring up, hey, I'm looking to buy a house and I just need to save a little money. And your parents say, hey, we'll chip in, we'll help you out. We'll give you 5% or 10% of whatever you're trying to buy and help you get on your way. That's totally fine. All they need to do is fill out a gift letter that says, hey, I am so-and-so's mom or dad, and I'm going to gift them 5%, 10%, whatever that is. Both of you guys sign the letter and you're good to go. So that's something to definitely keep in mind when you're looking to buy. Gift funds are okay on most loans. The next thing that you want to keep in mind is if you are self-employed, the bank's gonna want 2 years of tax returns showing that you've been in business and how much money you're making. So unfortunately, if you started a new business recently in the last 6 months or even a year, it's gonna be very, very difficult, if not impossible, to get a loan. So if you're a business owner and you go to file your tax returns, you always want to keep this in mind because, one of the benefits of being a business owner is you have a lot of write-offs, which is great. You don't pay a ton in taxes, but on the flip side, if you have too many write-offs, you won't qualify for a loan. So again, another reason you want to talk to a professional and find out, how much income you should report so that you can qualify to get that house. Another tip is avoid an FHA loan if you can. Okay, FHA loans were designed to help people with lower credit scores and lower income buy houses, which sounds great. And it can be a good loan program if it's your only option, right? Owning a house is still better than not, but ideally you want to avoid an FHA loan because it costs more. There's more fees. Not only are there more fees up front, but the monthly payment is usually higher than a conventional loan because there's a very high mortgage insurance rate. Okay, so another thing to keep in mind, if it's your only option, I won't really scold you for using it, but ideally if you can get yourself in a position where you can raise your score or lower your debts so that you don't have to get an FHA loan, I highly, highly recommend that. The last tip I want to leave you guys off with is If you have any kind of installment loan, for example, a car loan, let's say you got a car loan and it was a 3-year car loan and you're 2 years into it and you have about, let's say you have 9 payments left. If you have 9 payments left, the bank will not use that debt against your debt to income ratio. Basically, they'll pretend it doesn't exist. So keep that in mind. If you have a car and you're almost gonna pay it off, great, get that paid off, get the payments down. But if you have less than 10 payments, the bank will not even count that against you. All right, so if you found this video helpful, please hit the like button, and you definitely wanna hit the subscribe button, because next week, I'm gonna talk to you guys about step 2 in buying a house, and that's going house shopping. And I'm gonna reveal the top secrets and tips to make sure that you get a great deal when you do go house shopping. So you definitely don't wanna miss that. Hit the subscribe button, watch for my video next week when it's time to go house shopping and how to win that part of the process. Thank you guys so much for watching, and I'll see you next week.